Hey everybody, it's me, Aaron from The Better Traders and also here at Coin Bureau Trading. And I wanted to come live on YouTube right now. I was not planning on going live at all. I was actually preparing a different video to film for today, but given what's happening with Bitcoin crashing down 2% so far on the day, given what's happening with the Israeli conflict and all of this stuff that's happening, like it's not turning out to be a great day. So what is going on? Well, the first thing, I'm managing this myself today. Oh, that's the wrong button. There we go. First thing is, I actually noticed this from the Coin Bureau trading channel because I was wondering, like, what is going on? Over $1 billion has been liquidated from crypto markets as Israel launches a strike on Iran. So we're seeing a lot of pain in the markets. We're seeing a lot of unfortunate fallout from this. I am flying by the seat of my pants just a little bit. And I do want to say that war in any shape or form isn't cool. I don't care who's striking who. I'm not for it. You are not going to be finding political commentary on why this is happening, who should win, who's in the right, who's in the wrong. We just need to be talking about how we can react in regards to handling this pullback, this Black Swan event. Actually, if you watched Dan's video, he just talked about this 14 hours ago, which is wild. He warned all of us that a Black Swan event could be coming because of these heightened tensions between Israel and Iran. So big props to Dan. And again, another reason why you guys should be subscribed to this channel. Now, again, I'm flying solo on this. I don't have a co-host. I'm just going to be doing the best that I possibly can. But the best thing that you can do right now before I go any further is I need to make sure that you guys, for one, because I know this is an extremely sensitive topic for some people, given the political climate of the world right now, everyone's eyes are on Israel and everything that's happening around Gaza. I need you guys to be respectful in the comments. I need you guys to respect people with other viewpoints. But if you're starting to abuse people and you're starting to espouse a lot of hate, it's not going to be tolerated. So please don't do that. Okay. The second thing, make sure that you share this video. I'm going to be doing the best that I can. Again, I'm not a political analyst. I am going to be talking about the markets, how I'm reacting to this, how I'm playing this, how I am trading this right now, and how I've been trading the whole week. So again, help us. This is a different time for me to do a live stream. It's my morning. Actually, it's perfect time. It's 10:23 a.m. for me in Tokyo. But I know for some of you in North America, it's getting a little bit late at night. But this is happening right now. We need to talk about it right now. Cool. So the first thing that comes to mind when we see a large scale liquidation like this, not the video, but this. And do watch his video because he talks about a lot of the stuff I'm going to be talking about today. It's Dan's analysis. He does it differently than I do. But just watch the video, bookmark it, okay? Anytime we get a sudden downturn like this, anytime there's a massive liquidation event like this, and this is really small, let me make it a lot bigger. $1 billion of longs wiped out compared to 79 million shorts. The majority of them being Bitcoin longs. I'm not surprised with that, by the way. I want to actually scroll down here to look at our 1 million plus liquidations. Yeah, lots of altcoins, not surprised at that. Across exchanges, basically 95% plus are all long liquidations. We're going to see a massive spike today because it's just getting started. The thing about a strike like this, there's a lot of unknowns, there's a lot of uncertainties. So we need to not jump to conclusions on what's going to happen. But I already see a great question right here that I would love to answer. So the question is, so why would the Middle East conflict crash crypto? I would think it would bolster it. Well, the reality is that out of the entire global liquidity, out of the entire global markets, we in crypto think that crypto is everything. When in reality, crypto is a tiny drop in the bucket. Even though Bitcoin's market cap has surpassed silver, it surpassed Berkshire Hathaway, I think. Like it keeps moving up and up and up. The reality is that Bitcoin is still a very, very manipulatable market. It is easily manipulatable. So this is a market that will be shaken. pretty easy by news. Now, why is it being shaken by this kind of news? Why was it shaken when Trump and Elon were having their hissy fit? Right? Why? That's because it's a smaller market. So when we're thinking about Bitcoin, we need to think of this almost like steps, and thinking about it like exponentials. So Bitcoin is the rudder that steers the crypto ship. So whenever something big happens and Bitcoin starts to really get pulled by that, the wins, the sales of crypto, which is going to be all the altcoins, they're going to go out the window crazy. They're going to be dumping, they're going to be pumping whatever Bitcoin does. I've already made a video about this. You can watch it later. It's called the multiple factor effect. This is why I'm very cautious and careful on taking profit, why I'm religious about this almost. So when we have these events, we need to understand that it's going to negatively affect crypto, whether we want it to or not, even if it doesn't even affect us. Market's going to overreact. The other reason why it's going to react, or rather affect or shake crypto markets, is because crypto, unlike traditional markets, and now we need to go over to TradingView. Just give me a quick second. Crypto is open 24/7. So because crypto is open 24/7, that means that we are going to be experiencing a lot of volatility when traditional markets are asleep. Now, it does not mean, and I saw someone saying that where is it? Again, sorry, I'm running this. Yeah, someone was saying that the S&P took a hit too. I'm sure it did. We won't see that necessarily right now, right this second, because we're in after hours essentially. So let me go ahead and change my charts. So we're going to look at S&P futures, which are down. Yeah, they're down 1.5%, which is a pretty big move for the S&P. But I don't know the scale of the attack. I don't know how long this can last. But I will tell you guys that having a pullback like this after the market has already recovered significantly, in the grand scheme of things, war is not good. In the grand scheme of things, strikes like this, threat of nuclear arms being deployed, it's not positive. I'm not saying that this is okay, but I'm also looking at this going, well, the market is fully recovered. This is a great rally that a lot of people were able to recover their trades, recover portfolios, or take new long positions. Now, this is unfortunately unfolding before our very eyes, and we are seeing S&P futures falling more and more. This will continue. So this is also why Bitcoin is falling more and more. But the reality is that even with Bitcoin being down here at $75,000, it had a rally of 47% up to $112 or $112,000. Even this little pullback we had here on the 5th of June, going back up, we had another chance to exit. So why is this happening? It's happening because crypto is a small market and it's open 24/7. Now we need to focus on how do we handle this? Where are support levels? What's the best way to approach this? Now, before I go further, I'm trying to do double time right now, looking at my screen and also keeping an eye on the chat, on the comments. I think I got a little button right here. I'm going to try this out and see. For better or for worse. Let's see. So I will be looking at chart requests and things like that. But the reality is that I'm going to do my best. You'll see in a second, hopefully. I see a great question here. Actually, I want to answer this before I get into it. So this is from Soft Tone Space. Aaron, do you think this will change in the future? Right now, gold is pumping. I can see Bitcoin becoming a safe bet at shaky times. To be honest, right now, this is amazing. The fact that Bitcoin is down 2.3% is nothing, especially compared to the old days where Bitcoin would drop 10%, 15% on news like this. So yes, if we go to the chart of gold, gold is up right now 1.27% because there's economic and geopolitical uncertainty. This is the barometer that gold serves to prove. Like, this is what it does. This is the whole purpose of gold, is to serve as a safe asset. So because Bitcoin is likened to digital gold sometimes, people think that Bitcoin should be pumping. No. If we go back to previous crashes, and we'll just take the more recent crash. Let me just clean up the charts just so we can see price action, because it's a little bit easier. If we go back to August 5th, so for some of you that might remember this, on August 5th, the Nikkei crashed big time, which is the Japanese equivalent of the S&P 500. So on August 5th, there was a massive, massive event here. Let me go back over here. There we go. Where the Nikkei crashed in one day down 12%, which is huge. Crypto is not necessarily centralized in Japan yet, because we're seeing a crash happen for one market, it will negatively affect crypto. It's open 24/7. And when this crashed, the Nikkei crashed on August 5th. Now we need to counter that with the chart of gold. August 5th, it dipped a little bit, but it continued to rip higher. I'm not necessarily concerned about Bitcoin's price action in the short term. To be honest, looking at a lot of metrics, which we're going to be talking about in a second, I don't think we're really going to be dipping that hard. The first thing we need to look at is just price-based support. On the 5th of June, we saw a dip down here to $100,000. Now, when this dip happened, this was a little bit of a scary drop. I'm not going to lie I'm not going to lie to you. That was a pretty big drop, because $100,000 is a very psychological level. 100,000, period 00. That's the American style of doing it. I know people in Europe flip the commas and the periods, but $100,000 remains the same level that has to be held. If it doesn't hold, the next thing we need to do is to use our Fibonacci retracement levels. So the $100,000 level does coincide with the 786, which isn't particularly a really strong level of support, just so you know. I think I'm missing a lot of your guys' comments. I have this little thing up here. I thought it would be, it's okay. It's okay. We'll keep going because I want to maximize the screen so you guys can see. So $100,000 is the level to hold. I don't think that we're going to see a break of $100,000, but I will tell you, if 100K breaks, expect more downside continuation. In no way do I see this as a double top. In no way do I think this is similar to our November 2021 top. I'm not even looking at this as like a head and shoulders. Like, there's nothing like that happening. This is just geopolitical tension that's happening. So crypto is dumping. That's what's happening. The level to hold for Bitcoin is 100K. If 100K doesn't hold, expect things to get really spicy really fast. But here's the thing. When we're looking at markets dumping like this, the first thing we need to pay attention to is support in terms of volume. So let's go back over here. So on this dip on the 5th of June, which is all very fresh in our minds, this drop of 3% in a day was met with a lot of volume right here. This is what we want to identify to help us figure out if this is going to be the bottom or not. Usually, when we see the end of a downtrend, when we see the end of a lot of fear, which this end took, to measure it out from here to here, it was a 14-day move down. And it took a long time, and then finally it dumped, but the dump was supported by volume. That's what we want to see. Now, it's too early to say that's happening. Today's volume for BTC USDT on Binance is already at 834 million. So I still think that there's a lot more of the day left. I mean, literally there's 22 hours left or more. So I'm hoping that we get one push down to $100,000 to scare the markets. And I think that'll be it. But if it's not, the next level, the next target is 94,570. I don't expect the markets to stay this low for that long for a couple of reasons. One primary reason why is Bitcoin dominance. Even though the markets are dumping and they don't look good, they don't feel good right now, the reality is that Bitcoin dominance moving up tells me that the whales are still in control. The whales have the control. Whenever Bitcoin dumps like this, this is when we're going to see where the conviction lies in the market. Do we see conviction going towards alts? Absolutely not. No. Multiple factor is in effect, ladies and gents. We're seeing coins fall 2 times, 3 times, even 5 times more what Bitcoin is doing. And I'm not even taking the time to scroll down all the way. But here's the truth on this chart right here. This is why I spend so much time talking about dominance levels. I've already provided videos on this channel teaching you how to do this. When Bitcoin is dumping in the middle of a bull market, you will see Bitcoin dominance pump. Even if we see Bitcoin fall down more, we will see Bitcoin dominance shoot up to 65.34%, where there's current resistance. That's the high set back over here on the 8th of May. None of us really want to see Bitcoin dominance go up this high. And there's a good reason why. If Bitcoin dominance goes up higher, we know for a fact that we're going to see way more pain in others, in alts, in Ethereum top 10, but way down the list, it's going to get much, much rougher. So Bitcoin dominance pumping right now is actually a positive sign and a reason why I do not expect Bitcoin to lose 100,000 US dollars. Can it happen? Sure. And do you know what will happen when it does lose $100,000? Whales are going to be buying it up like it's going out of style. They're going to be buying it up like all the people this summer that'll be selling bottles of water for $10 outside of sporting events because they're trying to capitalize on all those poor, thirsty, and hot people. It's just going to keep pumping because there's demand for Bitcoin. There isn't as much demand right now for Fartcoin. Sorry, ladies and gents. So the reality is that Bitcoin dominance moving up while the price of Bitcoin moving down is actually a positive sign, which is giving me confidence to say, no, I don't expect it to dip below $100,000. Okay. Now, before I go any further, I need to take a second to kind of scroll through these comments, which is really, really hard because you guys are interacting a lot, which is amazing. And please like the live stream. I'm not checking up on the stats, but I know for a fact, because I watch live streams often, that the likes never, ever, ever equal the number of views. So if you're getting some good advice, some good actionable tips and strategies from this live stream, or you just appreciate the fact that we're on right now while this is happening, hit the like button. It helps our channel to grow. Share this live stream, repost it on X or retweet, however you want to say it. But we need to get the numbers up. We need to get the likes up on this, and we need to keep pushing forward on this stream. Now, you guys are asking for a lot of coins and a lot of charts right now. I will do my best to do this. I really need someone to monitor the comments, but there's too many. But yes, you can like it twice. You can like it 1,000,000 times, Jisley. It's okay. Yes, smash the like button. So the other really important chart we need to pay attention to right now is we need to pay attention to stablecoin dominance. I know that you guys hear me talk about this over and over. My goal, just like the sign above my head, is to help people become better traders. That is literally it. So we know Bitcoin needs to hold $100,000. And Bitcoin dominance pumping is giving me confidence for that. But we know that with Bitcoin falling and everything else is falling a lot more, there's a lot more fear in the market. And that's exactly what we're seeing with stablecoin dominance. This is a chart that's a combined dominance chart. If I were just to look at USDT.D, that's just showing me the market cap for Tether. But you actually want to type in a plus and then USDC.D, then you can see this chart, which is both of these crypto caps together. This is a really useful chart because these two stablecoin dominance charts comprise basically the most volume for stablecoins. I know there are lots of other stablecoins. I know there's USD1. I know there's all, like, whatever. It doesn't matter. These are the two that matter the most. Now, the unfortunate thing I'm seeing right now in regards to the TBO, which stands for the trending breakout indicator, it's this cloud thing that has this orange diamond right here. That's information, which isn't good. This is literally the inverse of this blue diamond. Now, let me quickly explain. The trending breakout indicator tells us the strength of the trend, and it tells us when there's going to be a breakout. That's what it does. Now, we have a closed long right here, which tells us that if you are in a current open long position, which was open back here on basically February 1st for stablecoin dominance, if you haven't taken profit yet, consider taking some out based off of this signal. So the bearish trend turned into a bullish trend, but this let us know before we got confirmation that the bull trend switched to a bear trend, let us know in advance, oh, be careful, things could be flipping the switch. So now let's invert this. We have an open short here, which tells us that we have confirmation of a bear rally or a bear trend. But this orange diamond lets us know the inverse. This bearish trend might be turning bullish soon, so you might want to consider getting out of this short position. That's what this is letting us know. I talk about this a lot on my channel. I talk about this a lot in my posts on X, all that stuff. I also talk about this a lot when I post in the Coin Bureau Discord server, although I have had issues posting in the last couple of days, but that'll get resolved soon, I'm sure. The main thing that I am concerned about right now is the fact that stablecoin dominance pumping does not give me warm, fuzzy feelings for alts. I know a lot of you have exposure to alts. I do too. I'm still holding on to charts that we're going to talk about in a minute, like SPX 6900. I have exposure to Kaya as well. That's been pumping, but we need to focus first on this. So the reason why I focus on stablecoin dominance is because it's very similar to traditional markets, the VIX. You better believe that tomorrow, the VIX, the volatility index of the S&P, is going to be pumping big time because of all of this that's happening right now. Again, the S&P futures continues to fall. It's down 1.74%. The VIX will be up here tomorrow at 25, maybe even up to 30. I won't be surprised in the least. So going back to crypto, stablecoin dominance pumping means that there's an increase of fear and a change of hands. Okay? The market, think of it like a pie. And that's what all these dominance charts do. While we can kind of add all these up together, they don't actually equal 100% because there's some dominance percentages that aren't worth tracking. But for the most part, the two that I really pay attention to a lot, Bitcoin dominance, stablecoin dominance. So when stablecoin dominance is increasing, this means that there is an increase in fear in crypto. Invert this. When we saw a big dump back over here, big pump on stablecoin dominance, this was when we saw the Pico bottom for BTC. Let me switch. So look at the date here. Monday, April 7th, Wednesday, April 9th. Monday, April 7th, Wednesday, April 9th. Okay. So this is like an inverse indicator. When I see a closed short, which is a early bullish reversal signal, this is letting me know that I should be braced for more pain to the upside in stable coins. It means that many of you and myself are going to be rotating out of altcoins and into stables because of the increased fear in the crypto market. But I really want to just drive this home. Even though we're chopping sideways, even though this feels not too great right now, take comfort because Bitcoin dominance moving up higher tells me that, okay, you guys gotta hear me out again. When Bitcoin dominance is pumping right here, in a pump of 0.68%, yes, this is actually pumping for Bitcoin dominance. It's a slow moving chart. This tells me that whales or big players or the majority of traders right now are buying the dip on Bitcoin. Think about this. If just hold on a second and think about this. I see your comments. I'll get to them in a second. If Bitcoin dominance is increasing, if $100,000 is likely to hold, which I fully believe it will, then right now we should be seeing, it depends on how this thing unfolds, but we should be seeing a bounce, and then we will see Bitcoin dominance continue to increase. As that increases, Bitcoin will increase and follow. Bitcoin won't fall as far. We're seeing positions in alts stopped out, so that goes to stable coins. But what's going to happen? They're going to be using that probably to buy Bitcoin. Bitcoin will go up, and Bitcoin will lead the market back up. So all of this is coming to the conclusion that this is a buy the dip moment. I know it doesn't feel like it at all. I know nothing about this feels comfortable. And I know that it could still fall further. But the reality is that we've seen this play out so many times. To me, this is a buy the dip moment. I know that a strike from Israel on Iran is not a positive thing. I don't celebrate anything that's happening in regards to any sort of geopolitical conflict. But in regards to the markets, we need to recognize this as a buy the dip moment. It's too early to say, oh, it's going to reverse right now. Oh, it's going to do this exactly right now. But we need to be prepared to buy the dip. Now, the other thing to remind you about is volume. Volume tells us a lot. Look at the price of Ethereum. Ethereum is down today 5%, but from wick to wick, it was down about 7% or so. I think that's what it said over here. Now, the reality is that volume for Ethereum has been good, but it has been falling. Don't like that. We want to see Ethereum's volume go up to say, that's the dip. Right there is the dip. We want to see that supported by Ethereum dominance, which is moving up. But this is the problem that I have with Ethereum. As much as I love the price action of Ethereum, Ethereum dominance, unlike Bitcoin dominance, is more closely tied to the price action of Ethereum. When Ethereum pumps, we will see a massive increase in Ethereum dominance. But we know for a fact that Bitcoin is dumping, but Bitcoin dominance is pumping. There's an inverse correlation there. Ethereum to Ethereum dominance, these are not inversely. They are 100% correlated. I know a lot of you like Ethereum. I'm still holding on to my ETH-BTC trade, which I'm still happily in profit on, and I'm not going to be changing anything really because I can just keep it open. But to me, right now, this is a buy the dip moment. Now, a couple of other things we need to pay attention to, and I need you to hear me out here. Trust me, my moniker, my X username, my YouTube channel is Aaron Dishner, aka Moon and Papa. When I first started posting, that was my choice of name. Yeah. So Moon and Papa, I want things to go up. But the reality is that the others dominance chart, which I follow every single day, you guys, as much as I want to see it pump higher, it is still strong bearish. As much as I would love to see all of your alts go up, the chart is strong bearish. Even though the others market cap has had an amazing rally from the 7th of April all the way up here to overhead resistance, it's still strong bearish. The only thing that will change my mind in regards to others dominance being bullish is going to be the day and the time that we see a massive pullback on Bitcoin dominance. And not just on the daily, on the weekly. So you need to understand that I am rooting for you. I want to see others dominance pump. But right now, Bitcoin dominance is still very, very strong. It is very much strong on the weekly. It's strong on the daily. And it's strong on the 4-hour. Nothing's going to stop this train, as Lynn Alden loves to tap the sign. Now, another thing to keep an eye on is Bitcoin volatility. We will be looking at charts next. I just need to talk about these macro things first, okay? BVOL7D, provided by BitMEX, tells us what the historical volatility is of Bitcoin, and it gives us an idea of what we can expect to happen next. It's been struggling in this bounce zone, which I affectionately have labeled in this range from 3.6 to 5. Usually, we see BVOL7D fluctuate wildly. And when we see BVOL7D pumping up here, that means that there's an increase in volatility to the upside or to the downside. Now, we know that for a lot of the time, we're used to seeing BVOL7D pumping and charts dumping. And that's happening right now. BVOL7D is up 6.48%. We're seeing an increase in volatility, but it doesn't necessarily mean it always has to be a decrease in prices. Back over here in November, late October to November, we had our Trump pump. We saw a huge increase in volatility with a huge spike in prices. We also saw a huge pump in volatility in January where prices were going crazy. But we need to be prepared. If we start seeing BVOL7D continuing to trend up and up and up, understand that we will see way more volatility for BTC. Okay? Now, there are so many comments that I am overwhelmed, and it's awesome and terrifying at the same time. So I like this comment. My toilet oscillates when I flush too. Yeah. The idea right now and how we handle this market volatility, I'm not going to say to buy the dip on everything. And that's the next thing I want to talk about today. We got about 30 minutes left in the live stream. Make sure that you've liked this live stream. Make sure that you retweet, you repost on X, that you share it online so that way we get a ton of people on here. I have no idea how many people are on with us today, but what matters most is that you're here. Warm fuzzies? I hope so. Now, what I want to make clear when it comes to buying the dip, this is a saying that gets used and abused a lot. And a lot of people really don't understand what it means to buy the dip. When I say buying the dip, I do not mean going all in on the first dip. What I mean is using a calculated percentage of your portfolio and then taking that amount and then taking like a quarter of it and buying some with the potential of being ready to buy more if it falls lower. This is a very, very difficult thing to learn at first because you have this idea that, oh man, this chart's fallen down 10% today. I got to buy this dip. I'm going to take out a loan and buy whatever this is. I'm going to buy beer coin down here, down 20% today. What a deal. What a steal. Just because Bitcoin could bounce back up doesn't mean that the alts are going to recover. We just saw Bitcoin dominance moving up higher. Bitcoin dominance moving up higher does not spell health and wealth for alts. You should know that by now. When we're talking about buying the dip, we want to be very picky about the coins that we choose. That's what I want to talk about next. So Ethereum, this chart has been struggling in a sideways range. Yes, we have TBT bearish divergence here, letting us know there should be a pullback, just like there was a pullback there. It's still not in the clear. The thing I want to focus on though is the TBO. Now replace the TBO if you don't have access to it, which is totally fine, with the Ichimoku cloud. Replace that with just an MA, just like not even a ribbon, just make it like an SMA. Like it doesn't have to be super duper complicated. But the point being that I like using a TBO because it's similar to the Ichimoku. So what I'm saying is that we want to focus on charts that are already strong bullish. Charts that have been bullish, not have been consolidating, not have been falling. Charts that have been consolidating, have been going sideways like this, that don't have an apparent uptrend are not good. They're not good for buy the dip opportunities if you're looking to make a good bounce on those trades. Even with an SMA. So the price, actually this is too tight. I think it's like a 9. Let's make this more like a 30 SMA. Charts that are below the trend aren't good. They're just not worth buying the dip in my opinion. But charts that have already been on a bullish uptrend, they already expressed strength. Those are the charts that are worth getting into. And to be honest, there aren't many of those right now. A lot of our top 10 charts that we really like to watch, Ethereum, XRP, BNB, Solana, Cardano, Doge, like all of these are struggling right now. They're all pretty much bearish or strong bearish. Bitcoin is the one that is the most strong. No surprise there. So understand that, yes, Ethereum might be very, very desirable to you, but just keep in mind, it has been chopping. It did have a really nice bullish uptrend, but the buy the dip opportunity was back over here and then selling on the bounce. Not everything, but some. But everything else below the cloud, strong bearish. This is chop consolidation, strong bearish, strong bearish, strong bearish. And now this is chop consolidation. So there are only really a couple of charts, in my opinion, that are worth paying attention to. Oh, and by the way, how you guys doing with Ohm? There's a reason why I don't talk about it. I just don't want people to get burned. So this is a perfect example, actually, in my opinion, why I avoid charts that are strong bearish. So strong bearish, in my definition, means it's below this TBO cloud, this mass, okay? There's no point in buying the dip on a chart like this that continues to fall. It will fall as much as it wants to fall. And the only time I will wait for, or rather, I will identify an entry or the need to, is when I get bullish reversal signals. But until that happens, I'm avoiding charts that are already bearish and falling. There's no point. Why would I want to buy more of a coin that has been consistently falling more and more and more? It doesn't make sense. There have been charts that have been flashing some really positive bullish reversal signs, but they're back to being strong bearish. One thing that I really like about this indicator is that this slow moving average right here tells me the strength and the direction of the trend, and it's down for a lot of charts. Not all. Now, hype. I just made a video on my YouTube channel and posted it an hour ago, and I talked about hype being an opportunity. The reason why I believe hype is an opportunity is because you can see when it had pullbacks, it didn't even fall far enough to go inside of this mass, the TBO cloud. So again, replace this. I don't want to upset people saying TBO too much because I know some of you are like really sensitive about that for some reason, but replace it with the Ichimoku, right? These are opportunities to buy the dip inside of the cloud. Replace it with an SMA. These are opportunities. Like, this is insane. So this is an extremely bullish chart. Why? Why would you favor buying the dip on a falling chart instead of a chart that's already been bullish? And I'll tell you why. I'll tell you exactly why so many of you struggle with this. Because you think this chart used to be worth so much and it's fallen, and this is the ultimate peak of bottom. It will have to pump from here. My order is going to change the trajectory of this chart. I'm getting the best possible lowest price so I can get the best possible return on investment. And you think, well, charts that are already moving up and to the right, what a waste. Why would I buy into something like this? It's already up 400, 500, 1,000%. Why would I buy the dip on a chart that's already pumping? But you can understand and hear this logical fallacy. This book that's behind my head, I have it placed right behind my head, hoping that some of you will see it. Trend Following by, I forget who it's by, Michael Covell. It's a great book. It is literally thicker than a dictionary. But it basically, to summarize the entire book, there's no wrong time to get into a trend that is strong to the upside or to the downside. Me, when it comes to buying pullbacks, like here on hype, this is a great target right here, but we don't have to wait for that. Now, another thing I want to help you guys with right now, because you know I'm all about the education, all right? The other thing is that you do not have to go all in on any of these dips. I want to help you out, so pay attention. The first thing that you can consider is dividing up your buys. You can have one buy in this range here for a target, and then you can place another buy. But if you're going to split it up, let me help you out a little bit. I need to make these a little bit bigger so I can type into these boxes. Text. So I would recommend, as far as a DCA strategy, start with 1/3. Oh, where's my numbers? And then another third. So this is going to be 2/3, or actually it's going to be 3/3, your total volume. So you're only putting in about 33% here on this line. If you're going to use this strategy, hear me out. It is foolish to put your second buy order basically right below it. It provides you no relief. There's basically no point in doing this, because if the price hits here and it keeps falling and you fill both of these orders, you're not taking advantage of DCA. DCA doesn't have to be time-based. It can be price-based, and it should be. So if I were to place an entry on hype, I want to have my first entry about here. And then I'm going to have my second one way lower, just in case. Now, why would I make this an extreme low? That's a great question. The reason why is because I can average down my entry. So let's say that this yellow line right here represents my entry. I have an entry, and once I enter with 1/3 and the price goes up 15%, then I take profit on that trade. Cool, I'm about 15% on the trade. Awesome. But let's say that the price goes against me even more, and it falls down 26%, which could happen. It could 100% happen. There could be bad news happening about hype. We don't know. This is why I don't go all in on buying the dip on the first dip, ever. Never, ever, ever. I always inch in to buying the dip, because when I can capitalize on the pain and the flash crashes and the flushes that happen in the market, and I can use double the size that I put in initially, what will happen is that my entry gets massively averaged down. So that when the market does something like this and it crashes 30% in a day, it will typically have a dead cat bounce up where I sell on that bounce. Boom. Now, one other thing to consider when it comes to buying the dip, not just focusing on charts that are in a strong uptrend, but sticking to your trading plan. If you are going to be buying the dip on Bitcoin today, which is fine, what's your plan moving forward? If you're going to buy the dip here at 103, which it appears to be happening, I mean, volume is already almost half of yesterday's volume, which is insane. And we are only, 2 hours into this day's candle. If you're going to be buying the dip here, what's your plan? Are you buying for the long term? And if you are, you shouldn't be complaining about sideways price action. But if you're going to be treating everything as a trade, then you need to have a plan for taking profit. And this is the part that a lot of you struggle with, because I was there too, struggled with it a lot. I don't want to brag too much, but you guys do know that I was very, very happy to take profit on my position on SPX yesterday. Was that yesterday that I posted that? I have to find the post because it's insane. 2 days ago. I want to show this to you. Okay, hold on a second. Let's stop screen. I'm not sharing this to boast. I want to help you understand why I do this. Where is it? Where is it? Oh, weird. Oh, I'll just put it back on here like this, and I can do this, and I can, perfect. So we need to scoop down here, way, 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 way down to SPX. Cool, and I can hide my fibs. Perfect. So on SPX, 2 days ago, on the 11th, I shared this. It's probably a telltale sign that, okay, something should have happened there for you too, maybe. So on the 11th, I posted this on X saying, I can't share it for some reason, there's nothing wrong with taking profits. Absolutely nothing wrong. I'm still holding on to my SPX, by the way, even as the price is having a pullback of 7%. The post, summarizing the post, is essentially saying that be satisfied with any amount of profit. There are no guarantees that prices go up to the right forever. So when you take profit in your positions, understand that you need to be satisfied with that profit and you need to stick to your trading plan. My trading plan, and I was very vocal about it, was to take profit on SPX. I took some out here at 113, and also here at about 143. Boom. And I walked away with 21K profit. As the rest of my portfolio sags, now the stable coins that I've loosened up, I freed because of this trade. Now I can use those coins to buy the dip. There's a lot to be said for taking profit, guys. There's nothing wrong. No one ever went broke taking a profit. But this was my trading plan from the get-go. And this is what a lot of you need to learn. And this is why you're going to subscribe to the channel, because this is what we are helping you with to maximize your portfolio's growth for this bull market. When I entered SPX back over here, I had a plan to take some profit out just below resistance right here. So at 200%, that's a great trade. So I'm happy to leave the rest in. There's no reason why I should be feeling bad at all. And because it's having a pullback, and because volume is already looking really great, I'm going to be looking for a re-entry. Absolutely, because the chart is still strong bullish in my mind. So I would much rather focus on SPX instead of something like, let me find another one. Let's see. Yeah, Giga. So there's no strong trend here on Giga. Absolutely no trend. Could it pump in the future? Sure, of course. It's an altcoin. It's actually a meme coin. It's a degen coin. Sure thing. Giga could absolutely pump. Same thing as Pengu could pump. Same thing as Nero. Same thing as Act. Same thing as all these other meme coins. I still think that meme coins are great coins for trading. But you have to stick to your trading plan. For WIF, you guys remember me. I had an automated position that opened up here. I took profit, some out here at like 117%, and it closed the rest out here at 76. I walked away with 96% profit, and the bot opened up 2 trades that got stopped out. I'm not holding a position in a chart that's chopping like this. I want to use trend trading to my ability to maximize my profit. You get what I'm saying? And I want to stick with charts that are in a strong uptrend. So right now, the charts that I'm seeing that are in strong uptrends, very easily, SPX 6900. It's a meme coin. I know some of you hate it, but I told you months ago in March that there would be a hated rally for meme coins, and that's exactly what we're seeing. Kaya right there. This one actually did something that I wanted to, I actually talked about in my video on YouTube. It lost support from yesterday. This is a negative sign. Kaya will most likely chop sideways now because of this price action. Volume is increasing because of the selling. But look here on the 4-hour. This is our re-entry. That's a tag right there on the 4-hour fast line. When we're buying the dip on something like this, have a plan. If you're buying the dip on Kaya and you're going to trade this price action, consider selling some on the bounce to de-risk your exposure. There's no guarantee that Kaya will just keep pumping higher and higher. Consider if you're going to buy the dip, awesome, good for you. Remember, we want to go in with just a little bit. That's supposed to be a 3. Now it looks just like broken. There we go. And then we want to save more in case it retraces. I don't want that to happen for this chart, but if that's my strategy, there we go. And when the price bounces up, I went to sell some so that I de-risk my entry. By de-risking my entry, it averages down my entry. So I don't have an average entry price of 15 cents. Now it's been averaged down to about 14.25 or so. De-risking by selling some on the bounce is a wonderful strategy that you can use over and over and over again. Other charts that are in a strong uptrend right now, aside from Kaya and SPX, honestly, it's difficult to find them. Maker had a nice push, but it had a retrace. I really can't think of anything else. Aave. Okay, so here we go. This is what we're talking about. Aave was in a sideways move. It had a strong push up. TBO breakouts, good source of volume happening. It's having a big pullback on today's move, right to the fast line. For me, after this video, I'm going to be placing an entry there and probably an entry down here. And I'm going to be selling a little bit on the bounce. Just because the chart was already strong bullish before, it's having a pullback. It's had several pullbacks on the way up to higher highs. Okay. Uniswap was big, but it just pumped. It was artificial. I really can't see anything else. So I need to go back to you guys and all of your comments because there are a lot of you posting, and this is going to be difficult to backtrack. But I'll do my best. Okay. So we have about 11 minutes left in this live stream. If you guys haven't hit the like button yet and you're still watching, slap yourself first and slap the like button. Okay. Let me try to go through some of these questions. Okay. Yes, actually, this is a great point right here by Charles. SPX dropped not as hard as other coins. That is actually a great sign of strength. When you see charts have a pullback, but the percentage is not as great as everything else, pay attention to that strength, especially if it's a meme coin. 8% is pretty big, but not as big as Brett, not as big as Fartcoin, Giga, or Pengu. So size matters. All right, I got a comment here for Sui Onegai, and you guys don't have to use Japanese to get my attention, but it does work, unfortunately. Although you really got to be typing in hiragana or kanji. I mean, onegai is so easy, but it's okay. And now you guys are going to use ChatGPT to do all this stuff, and then you're going to get difficult kanji that I can't read. Thanks a lot. I shouldn't have said anything. Sui. You guys know, by the way, why Sui's ticker is a water drop? Because Sui is one way to read the kanji mizu, which is water. So like this, like that. So Sui, water, there you go. You've learned something today. All right. Sui is still strong bearish, but the thing to watch right now is this. The dip that we saw back over here on, I believe, the 7th. Oh, it's the 5th of June. If this gets tested and it's confirmed, it will be a great bounce trade. The problem that I have with Sui is that it's losing a lot of momentum and a lot of steam. So the one thing that's not positive about this chart is that it's making lower highs, lower highs, lower highs. Actually, I should be using these horizontal rays instead and locking it. This actually would be a better visualization for it. This is actually what Bitcoin did. We were tracking it as it was falling lower and lower. So the problem that I have with Sui and buying the dip on a chart like this personally is that, yes, it could have a bounce trade, but people are going to be greedy thinking it's going to go back up to where it was. There's no guarantee of that at all. Just be really careful. The chart has been pretty bearish because anytime, in my opinion, where the chart falls below the TBO cloud like this, it's strong bearish. Boom. Inside the cloud is not a positive sign. Above the cloud is great. Now, if we were to invert this chart, yeah, it'd be this chart would be great. I'd be happy to get into this because now it's breaking out to the upside, but we all know that it's definitely not breaking out to the upside. Let me see. Arrow. That's a great question. Oh, is that why it pumped? Because I noticed that it did pump. It's an orange tag in here somewhere. And it's further down the list because it's a lower cap. There we go. So apparently someone asked, what about Arrow with the Coinbase DEX announcement? I want to say first off, I don't keep track of coins and their projects, their founders, their roadmap. I don't care about any of that stuff because honestly, it doesn't matter. All of this is magic internet money. They can say whatever they want. They can partner with whoever they want. It doesn't matter. Volume tells a story. Price action tells a story. Now, announcements, we're almost at that part of the market, in my opinion, where we're going to see all of the fundamentals stuff really weigh in heavily with a positive move in the market, meaning that this listing or this partnership with Coinbase DEX for Arrow, cool beans for them. It pumped 22% in a day. There was volume to support that move as well, which is awesome. The positive thing that I'm seeing in regards to the TBO are these two orange diamonds right here. TBO closed short. Let us know that we are in open short position. So we should be expecting the price to move to the upside. So that's a positive sign. Seeing a pump like this is kind of good, but it's only good if volume continues to overwhelm this yellow moving average and forcing this yellow moving average to go up higher and higher. And that would also reflect in bullish price action for Aerodome. Now on the weekly, it's still strong bearish, and it has been strong bearish ever since it fell out of the cloud in January. If we were to measure this move actually to see how it's holding up right now, let me get the highest high right there. It's kind of okay. I always like to find these buys around the 236 personally. As far as like risk reward potential, if we have a nice rally that actually happens and materializes later this year, Aerodome could push up higher, but it has struggled. It's really clear that this is a very strong level of resistance for Aerodome. So as far as like long-term hold, it's capped out, in my opinion, at about 277% from the current price. So that's what I see there. Good question. I don't know. Gizly asks, do we still think alts will have their time to shine? Absolutely. I 100% believe that it will happen. It's just not happening today. No, but again, this goes back to everything I talked about at the beginning. The only time, yeah, look at Bitcoin dominance moving up higher, 0.88%. If it goes up 1% today, that'd be amazing. The only time we're going to see alts fly is when we see Bitcoin dominance dump. Proof. Back here in November, we saw Bitcoin dominance fall a lot from November 21st to about December 7th. During this time, we saw altcoins absolutely smash higher highs. They were pumping. They were going crazy. Do you remember this? In March 2024, we saw actually this rally that lasted a lot longer. Bitcoin dominance was trapped in a sideways range of about 4% for a long time. No strong apparent uptrend and big drops in dominance. This is when we see alts absolutely fly. Will we see alts have their time to shine again? Oh, yeah. The best signal for that, in my opinion, is going to be these dots. These are what I'm really waiting for. These are TBO breakdowns. They're the opposite of the breakouts. These mean that we should expect bearish, explosive price action, which we most certainly saw from March 2021 over here to May 2021. We saw a lot happening for altcoins during that season. We want to see Bitcoin dominance top out because look, when it topped out back over here at 73%, this is really where the altcoin rally started. And actually it dumped during this period. We want to see it top out and then flash one of these blue diamonds to let us know the top's in. The problem I have with Bitcoin dominance, again, is that it's strong bullish on all counts. Nothing about this is bearish whatsoever. It's still bullish. Let me skip ahead to see. I don't do copy trading. I have signals where you learn how to trade for yourself. They're free on All Trading. Let's see. Let's see. Yeah, good job. You got it. ICP sashimi. You bet. I love sashimi. Oh, I really want, that's not fair. Man, I want to have some, but I can't. It's okay. Next week. So ICP, this one has been really interesting because they had some really good news, if I'm not mistaken. ICP, I think, had some partnership, or no, that was Chainlink, excuse me. And I'll look at that one next because I still think it's worth looking at. ICP got really overheated, got really good volume, and unfortunately it's retraced, but it's back to the daily TBO fast line, essentially. Whenever I see a chart that has a nice uptrend like this, look back over here. Don't even have to look that far. Look, nice uptrend, really good move, up 30%, and it falls back to the fast line. This is exactly what's going to happen, by the way, with ICP next. Here's our entry. I hate when it does that. Here's our entry. Goes against us by 5-6%, and then it pops up a little bit, 10%. Boom. That's it. That's the trade. And sometimes it will take 8 or 9 days. So if I were to take a trade on this, on the fast line right here, I'd be looking to take profit probably about 7-8%. It's not that big. I would have not a stop loss, but a DCA order down here. So this is my 1/3. This is my 2/3. This is my take profit. I would write it like that. It just depends on how brutal things get after this. Chainlink had a really good partnership announcement. Unfortunately, they've given back all of the gains, and it's down here at support. Super frustrating. But again, we're not at that point in the market where we can just thrive off of partnerships, announcements, roadmaps, developments, new whatever, blah, 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 new marketing, blah, 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 blah. It doesn't matter. It doesn't matter at all right now. The main thing that has to happen for Chainlink, in my opinion, is that if it doesn't hold support here at 1282, this is the next level. It's not good. And again, the macro is strong bearish, and it has been. And even ignoring the TBO and fib levels, it's clear that there's long-term overhead resistance that hasn't even been tested yet. This chart has been smacked around so hard. And this is frustrating because this is one chart or one company that I do know that they actually provide a lot of utility. Like they actually do a lot compared to Fartcoin, compared to others. I'm not saying that one's better than the other, but we have to recognize that some coins deserve to have good news and good things happen, and yet they don't pump. It's just how it goes. Okay, good question from Lucas. All right, this is a serious question, and I can't answer this the way that I want to, but I will answer it the best I can. He asks, what do I do if I put money in a few days ago to Ondo, Sui, ETH, SPX, ADA, and more, and now they're all dipping? Should I swap them all around to reset something? I can't put any more in. Don't put any more in. That's the first thing. You've already identified the strong issue that most people struggle with. They think, well, I'll just add more. I'll add more. It's not adding more. It's making sure that you have a healthy and balanced portfolio, just like a healthy and balanced breakfast. What do? First thing you need to do is you need to think of your portfolio. Let me see if I can grab one of these guys. Come on. I just need... I'm not going to have it, am I? That's okay. This is your portfolio. When you start dividing your portfolio up into multiple coins over and over, you are exposing the risk of your portfolio by 8, we'll say. So you said what? Like Ondo, Sui, ETH, SPX, ADA, and you have others. So that's a lot. Already you've chosen 5 positions and you have more. The problem with this is that this portfolio is not very well weighted. And what I mean by that is there's too much exposure. The first thing you have to do is honestly take half of it. No one likes this, but it's the truth. BTC, the other half, stables. Then you can divide this up as much as you want. But personally, I don't juggle more than 5 positions at a time. There's no reason to exceed the number of fingers I have. So, and if you're digitally impaired, I'm so sorry. But the reality is that Bitcoin will buoy your portfolio. It's only down 1.7% right now. Stablecoins will buoy your portfolio, giving you the liquidity to buy the dip on Ondo, on Sui, on SPX 6900, on Cardano. So what do? Now that you know what you should be doing, how do you tackle this problem? The temptation right now that you're going to have is you're going to think, well, I want to swap from this to this. If I just swap something that's weaker to something that's stronger, then I'll be better off. That could work. It just depends where things are. And as much as I love SPX, we have to recognize the fact that it did hit its all-time high. There's a chance that it could continue to rip up higher. It does have a strong propensity to go up higher. So yes, you could consider swapping some of your coins into an already strong chart, but you run the risk of a chart that's already at resistance compared to a chart that's just getting started. One other possibility that you can consider, and this will take discipline and practice, and we're going to use ADA for an example. One thing that you can do is that even in a position that's down, like let's say that you enter here and you're thinking, oh, this is a great spot. You enter, the price goes up, you're feeling good, and it goes against you. And then you're marginally back up. What a lot of people do on this second bounce is they go, oh, thank God, it's not going to go down again. I'm in the clear. And the problem that a lot of people run into is that we all know what happens next. Completely poops the bed. What I suggest you do is on any bounce that comes your way, even if you're in the red, even if you're 20% down and the price goes up a little bit, hear me out. But actually, if you take a little bit of profit on any bounce that comes your way, even if you're selling at a small loss, you will free up capital to buy the dip, which will actually take your entry and average it down as soon as the price, of course, bounces back up and you sell on that next bounce. This is admittedly difficult to do, and it requires robotic discipline and precision. But that's what I do, and I have done, and it works well. It's DCAing at a loss, but by selling the little pops that happen and then using that money to reinvest and buy lower, you will average down your position over and over. It will slowly get moved down more and more and more and more the more you do it, so that eventually you are not just at break even, you're in profit. It will not happen overnight. It will take work and discipline, but that's one of the best things I can recommend there. Just taking a look at other comments. This is a great comment right here. I want to talk about this. Is this a good time to short the market? So FedBomb believes short it all. Now, I don't know the intentions of this person. I don't know who they are. My guess is they might have been shorting the market and they just want to cause more fear, or they're shorting the market late. I will say that you run an extreme risk shorting the end of a move. When a move is happening like this, and we know that Bitcoin dominance continues to go higher and higher, working its way to 1%, meaning that Bitcoin is being purchased on the dip right now in real time. Entities are buying the dip on Bitcoin. It's actually making a higher local high, which is amazing. Because this is happening, there is a greater chance for Bitcoin to reverse. What will happen if Bitcoin flips green on the day with a long lower wick? The markets will go absolutely crazy in reverse. So, yeah, you could short it all, but it depends on when you short it. I personally am not shorting anything right now. I don't see a need to in a bull market. I would much rather use DCA to buy the dip. Shorting the market would have been a good move up here, actually back even over here, but this move up here to resistance, this was a good time to short it. But right now at the bottom of the move, even if it has the propensity to fall down another 3%, it's not worth it. Even knowing that alts will massively dump, especially meme coins, they will massively dump compared to BTC. Shorting the bottom of the move is a really dangerous strategy. And equally so, going long on the bottom of the move, really dumb. Especially going long with leverage on the bottom is dumb. We're going to see more long liquidations take effect. Now, let me see. I'm trying to read more comments real quick. I already talked about Ethereum. Yeah. Because you love this space. That's why. Wait, it's 4 a.m. Why am I even awake? Because what's the difference, man? I mean, sun's going to be up in like 30 minutes. Or at least that's how it is here in Japan. Sol Tao Doge. Onegaishimasu. Let's see. There's a lot of comments that are just pouring in. I really appreciate it, guys. I can't catch up all these coins. All right. Here's the plan. What I need you guys to do right now is, if you're in a position where you're down and you're at risk of liquidation, for one, take a pen and paper, write down how you're feeling, write down what's going on, what happened, how you reacted, how you didn't react. Write all this stuff down. It will be massively beneficial to you. Understand that things could go lower and alts will continue to suffer more. But we want to focus on charts that are already strong. We want to focus on the charts that are already strong. And in my opinion, it's Kaya's doing so-so. It'll chop sideways. But SPX, that's what I'm focusing on. Aave, I'm focusing on this. I'm also focusing on hype. And this is the blessing in it too. Instead of caring about the entire market, identify a small list of coins that have already been bullish. Focus on those. The second thing to think about is if you're in a losing position on anything, understand that this is not the time to freak out and sell at the bottom. This is the time to consider what's your strategy next. If you're massively down on a position, consider the DCA strategy that I shared before, where on any bounce that comes your way, you can free up capital. So that way, if it falls lower again, you can buy the dip again to average down. It takes practice doing this. The third thing to consider and to remember, actually there's 4 in total, but the third thing is your DCA percentages. On the chart for hype, I already passed it, didn't I? Right, we have our boxes here. Consider if you're going to buy the dip, don't go all in. Consider using a third of your total capital that you've decided in advance. And when the chart goes against you more, then you have more capital ready to buy the dip with. And what's going to be your plan when it bounces back up? Are you going to hold forever? Are you going to sell some on the bounce? I'm of the belief that you sell a little bit on the bounce to de-risk your entry, to de-risk your position. And if it goes up higher, cool. If it hits your 1/3 position size and it goes up higher, cool. You just did a good job on a trade. Way to go. The other thing to consider is your portfolio weighting. How is your portfolio allocated? I still think it's a good idea to have BTC and stablecoins in your portfolio. This is so hard to draw like this. This is ridiculous. But it's a good idea to have Bitcoin and stablecoins in your portfolio, taking up half of it. This way, you are buoyed in either direction. And when we have red days like today, you can deploy some of your stablecoins into these losing positions one at a time. One at a time. There's a lot to learn, honestly, from days like today. And it's not fun to experience days like today. And the reality as well is that days like today aren't an anomaly. We aren't going to, this is not the only one and done dump that we're going to see. We're going to continue to have pullbacks. There's going to continue to be unforeseen circumstances that tank the crypto market. But the important thing to remember is, what is the purpose of your trading? Are you short term? Are you long term? If you're long term, this shouldn't really bother you. You should be excited about this as another opportunity. But if you're short term, what's your trading plan? How are you going to navigate the market? How are you going to play the bounce? How are you going to react when the market recovers? Decide these things in advance before you just buy coins willy-nilly. Understand that this has taken me years to become disciplined and better at. This is why the kind people at Coin Bureau have invited me to be a contributor on this channel. It's easier said than done. Trust me. But I don't say anything to you guys that I don't practice myself. And I still have the majority of my portfolio in BTC. So understand that there is nothing wrong with taking profits on a bounce. There's nothing wrong with protecting profit with a stop loss. A lot of stuff I've already shared on this channel. You guys have been fantastic. Thank you for hanging out with me today. I need you to think about these things. Take a piece of paper, take some time, reflect on your portfolio, reflect on how you've reacted to this pullback, and understand that Bitcoin dominance moving up higher and Bitcoin not falling as much tells me that this is probably going to be it. We probably won't see Bitcoin down $100,000, in my opinion. If we do, we know what to look out for next. But for now, to me, it looks like it's okay. So again, thank you guys so much for hanging out with me. Until the next time, you know what to do. Stay awesome and stay in the green. Peace.